Ladies and gentlemen, good day and welcome to the Tube Investments Q2 FY26 earnings call hosted by IIFL Capital Services Limited. All participants are currently in listen-only mode. There will be an opportunity to ask questions following the conclusion of the management's opening remarks. Please note that this conference is being recorded. I now hand the conference over to Mr. Joseph George from IIFL Capital. Thank you and over to you, sir.
Thank you, Inba. On behalf of IIFL Capital, I welcome you all to the 2Q FY26 results conference call of Tube Investments of India Limited. From the management, we have with us Mr. M.A.M. Arunachalam, Executive Chairman, Mr. Velayan Subbiah, Vice Chairman, Mr. Mukesh Ahuja, Managing Director, Mr. A.N. Mayappan, Chief Financial Officer, Mr. Shivdeep Singh Jammu, Division Head TPI, Mr. M. Shivkumar, Division Head MFPD, Mr. U. Rajagopal, Division Head TI Cycles. We also have with us Mr. Jalaj Gupta, CEO, TI Clean Mobility, Mr. S. Gopalakrishnan, CFO, TI Clean Mobility, and Mr. N. Govindarajan, CEO, 3Expert Innoventure. I will now hand over the call to the management for opening remarks, post which we will have Q&A.
Yeah, thanks, Joseph. The board of TI met today and approved the financial results for the quarter ended 30th September 2025. Standalone results for the quarter, revenue in Q2 was at 2,119 crores compared with 2,065 crores in the same period previous year. PBT was at 250 crores compared with 225 crores in the same period previous year, which is a growth of 11.5%. ROIC was at 44 for the quarter compared with 45% in the same period previous year, and free cash flow for the quarter was at 183 crores. A quick review of the businesses. Engineering revenue for the quarter was at 1,382 compared with 1,323 in the corresponding quarter. PBIT was 164 as against 162 in the corresponding quarter. Metal Form Products was at 408 crores compared to 404 crores in the corresponding quarter previous year, and PBIT was at 44 versus as compared to 46 in the corresponding quarter for the previous year. Mobility business, which is a bicycle business, was 194 crores compared with 168 crores in the corresponding quarter in the previous year, and PBIT was at 4 crores as against a loss of 0.36 crores in the corresponding quarter. And the others, revenue for the quarter was at 227 compared to 243 in the corresponding quarter, and PBIT was at 18 compared to 9 in the corresponding quarter. At a consolidated level, consolidated revenue was at 5,523 crores as against 4,925 crores. And the profit before tax for the quarter was at 459 crores as against 426 crores in the corresponding quarter. CG Power had a consolidated revenue of 2,923 crores and a profit of 388 compared to a revenue of 2,413 and 294 in the corresponding quarter. And Shanti Gears had a revenue of 132, which was up against a revenue of 155 in the corresponding quarter, and PBT was 29 compared to 34. So let me stop with that, Joseph and Inba, and be happy to turn it over to the audience for questions.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may click on the raise hand icon from the participant tab on your screen. We will wait for a moment while the question queue assembles. Any participant who has a question may click on the raise hand icon. We have the first question from Siddhant Dand of Goodwill. Please go ahead.
Am I audible?
Yes, sir.
Yes.
Yeah, hi. My question was regarding our metal formed products division. What is the because we've not grown this quarter year on year. So what is the market size of the industrial chains and other businesses over here, and even the two-wheeler chains? And have we lost market share over there?
Let's say like your question was one on the auto chain side and another is on the industrial chain side.
No, yeah. So just to clarify, industrial chains falls in the others category, and auto chains falls under metal form products. Okay, so
Okay.
I think if your question's around auto
Around both
chains,
of them
then
actually then. Chains in
okay,
general
so
then.
he's asking for chains in general. So okay, so we can talk.
So chains, our market share is intact. Rather, it is a marginal, there is an improvement in that. And industrial chain also has done pretty well last quarter. So there also, maybe let's say market share is well maintained, to answer your question.
Okay, what is the total market size in industrial chains?
Industrial market size is about 900 crore, and we do almost maybe let's say close to 50% share in that.
Okay, understood. That's very useful. And how much would the export market be over here?
As a part of industrial chain.
Yeah, export share of our revenue.
So we exports maybe do as a total TI about 15%.
Okay.
And maybe as of now, we don't share the breakup between engineering division and the industrial chain, which basically does both. At a TI level, we do about 15%.
Okay, understood. Thank you so much.
Thank you. Before we take our next question, we'd like to remind participants to ask a question. You may click on the raise hand icon again. Our next question is from Joseph George of IIFL. Please go ahead.
Thank you. I have a couple of big picture questions. One is when the government announced the GST cuts, the hope was that it will trigger consumption, it will boost the overall GDP growth, etc., etc. So from your company's perspective, compared to the growth that you were expecting for your businesses, I mean, you don't have to quote numbers, but compared to the growth that you were expecting for your businesses, say 3 months back, and when you look at the situation today, again, when you look at the growth forecast for each of your segments for say FY26 or FY27, are you seeing a significant upgrade compared to what you were seeing, say, 3 months back, without quoting any numbers, but just to give you get a feel?
So Joseph, thanks for your question. Like you are aware of, TI is mainly dependent on auto as well as non-auto. And if I discount the September first half, where the 22nd September GST rates changed, after that we see a really uptick in demand, but which can be coupled with the festive season also. October as well as November both seems to be very, very strong months, like earlier festival months used to be, but this time it is much better. Let's see going forward how it is going to sustain that we are seeing collectively. But as of now, there is a good uptick in demand.
Okay. The second question that I had was also in relation to GST. So, after the GST cut on ICE vehicles, the relative attractiveness of EVs, from a total cost of ownership perspective or the initial acquisition cost perspective, would have relatively reduced. So, are you seeing any impact on your, EV sales because of ICE vehicles becoming cheaper?
Yeah. So, Joseph, there is definitely impact of the ICE becoming slightly more attractive versus the EV vehicles post the GST reduction. However, the impact varies from businesses to businesses. So, for example, in the e-track business and the small commercial vehicle business, the impact is minimal and is recoverable in 2 months to 3 months from a total cost of ownership perspective. In case of three-wheeler business, where we see the impact is the highest, because the diesel that translates to almost 20,000 rupees for a ICE vehicle in from a customer price point perspective. So there we are seeing the ICE industry growing much more as compared to, let's say, the last month, as compared to, let's say, what the EV industry grew. When it comes to our bigger, because M&HCV business, which is the IPL Tech business, over there, it's not impacting simply because the customer takes the GST as the input credit. So it varies. So overall, we'll say, is there an impact? We'll say from an electrification point of view, perhaps a minor impact for a three-wheeler business. Otherwise, it's all well manageable.
Understood. Thank you. I had 2 or 3 other questions in relation to the EV business. I'll just take them one by one. So, in the past, for the EV segments, trucks, three-wheelers, SUVs, etc., you used to share the volume number for the quarter. If you could do that for this quarter, it'll be great.
Yeah. So, you want for the Q2 the volumes for the businesses?
Yes, for the second quarter, if you can share the volumes for trucks, three-wheelers, SUVs, tractors, etc., which you have done in the past as well.
Sure. So for three-wheeler, it's 2082. For HCVs, it's 44. For small commercial vehicles, it's 167. And for e-tractor, it is 100.
Perfect, great. 2 more questions. Yeah, sorry.
Yes. Yeah, from a revenue perspective, Q2 was perhaps one of our best quarter up till now for the business, and we were up vis-a-vis Q2 of last year by 21%, and we were up vis-a-vis Q1 of this year by 31%.
Great. Just 2 more questions on EVs. One is, would it be possible for you to share the cash balance in TICM now? Maybe at the end of 2Q?
No, we don't share specific data on that, Joseph. So I think we don't share.
No problem. And the last question on EV was, based on the current cost structure, what are the monthly volume levels for each of these segments where you can hit maybe EBITDA breakeven?
It's a bit early to tell, right? I mean, basically, so because, honestly, I've given an estimate in the past and I've been wrong. So I'd rather kind of err on the side of caution here. So till we get to a stage where we're comfortable giving numbers when we're getting this thing, we don't want to share at this stage.
Sure enough, sir. Thank you. That's all I had.
Yeah.
Thank you. We take the next question from Vipul Kumar Shah of Sumangal Investments. Please go ahead. I'm sorry, Mr. Shah, we are unable to hear you.
Yeah, am I audible?
Could you come a little closer or increase the volume of your microphone?
It's max. Okay. Is it better now?
Management, are you able to hear them? Hear Mr.
No,
Vipul?
no, we're not. Yeah, maybe. Yeah.
Yeah, so can you
Yeah.
share
Go ahead, sir.
for engineering division, sir?
Yeah, Vipul, can you come on question once again, please? We do not hear you.
Can you share the volume growth for engineering division, sir? It was growth, degrowth, or growth of how much percentage?
On volume terms, it is around 10%.
10% as compared to same quarter last year, sir, right?
That's right.
Okay. And export volume growth?
Exports, maybe in particularly Q2 was a bit slower, particularly in US, but rest of the geography, it was okay.
Do you share tonnage in engineering division, or you would not like to share?
Generally, we share as a total TI, which is about 15%, like we shared earlier.
No, I'm talking about entire engineering division. Can you share the tonnage?
We don't share the tonnage generally.
Okay, sir. Thank you very much.
Thank you.
Thank you. We'd like to remind participants to ask a question. You may please click on the raise hand icon so that we can unmute your connection. We'll take the next question from Joseph George of IIFL. Please go ahead.
Thank you. I had two, three more questions in relation to the standalone business. One is we have seen strong growth in the mobility segment. So wanted to understand what strategy is playing out. Is it entirely driven by market share gains, or are you seeing a revival in the end market? And if it's market share gains, what is the strategy behind it that is playing out?
So, Joseph, in mobility division, our focus was more towards the specialized bike, and we launched even the e-bike. We are a bit focusing going forward on the fitness side of the business story. So this led to the margin improvement. And regarding your question, whether it is sustainable, yes, we feel it is sustainable.
That's great. And two more questions on the standalone side. One is, could you talk about the impact on exports to US? I know exports to US is a relatively small piece of your business, just about 4% of revenue. However, since the increase in tariffs to about 50% sometime in August, we understand that a lot of exporters are struggling with volume dips of 70, 80% year on year, etc. Could you give an update on the situation there?
So, Joseph, there, wherever we are supplying to the OEMs, which maybe approval process is also quite longer, and that's how it gives an advantage in this kind of a time, where the business is sticky for some time, surely. But wherever the distributor market is there, we see a bit of slowdown. So overall, maybe like you said, that our US impact is around 4 to 5%, which is in Q2, we see a bit of slowdown, about 10%. And let's hope going forward, we'll be able to maintain that.
Great, sir. And the last question that I had on the standalone piece was on the railway business. I think that is a segment that you had mentioned that you've got a strong order book, and we were expecting the revenues and the growth to kick in starting fourth quarter. So if you can give an update on the railway business, that will be great.
So, Joseph, like earlier, we maintained that business will start in Q4. We met our customers, maybe I met them even last week. So we see there'll be a delay of about 1 quarter because of other supplier supply chain is not ready as on now. But from TA perspective, we are ready. So we see about a quarter here and there gap going forward as per our customer projections.
Understood. Thank you. That's all I had.
Thank you. We take our next question from Salil Desai of Marcellus. Please go ahead. Mr. Salil Desai, could you please unmute your connection and ask your question?
Right. Hi. My question is for Jalaj. Volumes on the EV businesses that you gave right now, if we just look at individual segments, then three-wheeler growth is just about 2% year on year. And in trucks, it is just about 5% for this quarter. So could you give us some color on how the market has been, and how are you looking at either market share or any strategies on how you could accelerate this volume growth? Because EV is in adoption mode, I'm assuming that the pace of growth should have been much, much faster.
Yeah. Okay. So, Salil, on the truck side of it, definitely we are seeing competition coming in the big truck segment. As we speak, there are about 7 to 8 players who are now active in the market. So, having said that, still for H1, we had a 50% upwards kind of a market share. We held on to market share of 50% plus. We have our plans in terms of introduction of. So in the month of September, we introduced a 4x2 variant. We also introduced a swap technology on our 4x2 as well as 6x4 in terms of our product. We have tipper as a product which is lined up for introduction in the market in the Q4 of this year also. So we have our plans, including some of the other market interventions and some of the earlier wins which we have gained from 300 plus trucks which are already running on the road. When it comes to three-wheeler business, yes, you are right. We would have wanted to scale up our volumes much more than what we have been able to. There were some product concerns which we have now put it together, and the new variant with all the improvement we have put out in the market last month only. And hopefully going forward in the L5M category of product, you will see the uptick in terms of the volume. We are also planning to enter into the cargo as well as the L3 segment towards the end of the year. So overall, three-wheeler business, we will see the uptick, if not in Q3, definitely from Q4 onwards.
Understood. Thanks. My second question is on the medical division. Right now, here, revenue growth has again been flattish year on year. At least for the last 3-4 quarters, we haven't really grown much. So, how are we looking at this business? What is the potential? Is there, any new product gains, any new markets that you think can take us from these almost anemic growth rates to something which is much better?
So your observation is right here. In particularly September month, we have seen bit of slowdown because of the GST impact. All dealers and maybe hospitals slow down on the particularly to offtake of the orders. We feel maybe it will get compensated in month of November and December going forward. And we are working on new product development also to enhance the revenue going forward in TA Medical.
Any qualitative targets that you can put in mind? What would you be happy with? 10,
Internally,
12,
we are
15%?
targeting growth of 15% plus for the surgical business what we have, and also we are working on exploring new vertical to launch under the TA Medical.
Got it. Great. Thanks. And lastly, I had one request. For Shanti Gears, the numbers haven't been really great this quarter, but it's very difficult to get access to the management. So it would be nice if you could have a representative from Shanti also on the call, maybe from the next quarter.
If you have any specific question, maybe we can take it.
Yeah, but we can do that also, Salil. We can get the Shanti Gears on that.
Oh, great. Thank you so much, Palani.
Thank you. We have our next question from Vipul Kumar Shah of Sumangal Investments. Please go ahead.
Yes, sir. What was the capacity utilization for engineering division?
Like we shared earlier, we maybe let's say plan capacity utilization almost 2 to 3 years ahead. So as of now, we are running at 80 to 85% capacity utilization, and our Nashik plant has just started in cold rolled strips, as well as Falton plant also started doing commercial production just this month. So we are covered at least for next 1 to 2 years for having enough capacity to drive the growth.
Thank you.
Thank you. Our next question is from Rishabh Shah from RBSA Investment Managers. Please go ahead. No, sir. Could you come closer to the mic?
Hello.
Yes, sir.
Yeah, just on the electric heavy commercial vehicle space, I understand that you mentioned about new product launches and battery swapping technology. So do we have what it takes to go all in now and capture the market, given that you're seeing increasing any competitive intensity? Or is pricing is still a deal breaker? If you could just highlight some thoughts there.
Yeah, so thanks for the question. I think in terms of product performance, what we have demonstrated to the customer, our existing customer satisfaction and the repeat orders which we are getting, we are very, very confident that we have in us to capture the market. And as I told you that despite so many number of players being there, our market share has been in 50% upwards. So yes, it's going to be a competitive market, but I think from a product standing point of view, our customer feedback and product performance point of view, I think we are very, very bullish and confident about H2.
Okay. And just a clarification, we have seen certain companies doing retrofits to IC across the formats. So is this really a risk? Do you see success there, or just initial success that they're seeing in terms of retrofits to IC across formats?
So we have carefully and we have purposefully chosen not to go this route because we are convinced that grounds up, EV is any day a better bet as compared to, a retrofit on any of the vehicles. That's our understanding and our take on this.
Okay. And on the medical devices, you mentioned that we're targeting 15% growth. I think earlier we were targeting 20-25%. So is it that are we just being conservative here, or has anything changed in the business?
I mentioned about the existing what we are doing the sutures, but including what I told, we are going to add some vertical. Surely we are targeting 25% CAGR on the TI medical.
Okay. And just big picture question, TI over say over a 5 to 10 year period has always delivered strong double-digit growth. So that thesis is still intact, right?
Yes, it is intact.
Okay. Thank you.
Thank you. We take a next question from Jnanasundaram Swaminathan from Avendus Spark. Please go ahead.
Thank you. Thank you, team. Valiant, my favorite question that I often come across in all your calls is that cash. Current investments has been about 150 crores on books currently as we see it. Debt has been completely repaid. So what is the plan with capital allocation? Any thoughts on that?
Yeah, so if we look into next year, so basically the breakdown is going to go. See, the core business, we're basically seeing revenue growing by about, in the range of like 10, I would say PBT, definitely in the range of like 12 to 15%. 12 to 14%, 12 to 15% is what we see. That's going to require a certain amount of capital for expansion. So that's going to be kind of theme one. Theme two is going to be, sorry?
Would you be able to quantify the CapEx requirement for the base business?
Yeah, go ahead. Okay. What are you saying for the base business?
So for base business, we are going to invest next year about 300 to 400 crore range for the standalone business.
Yeah. So that would be the base business. The second is what will go into growth on TI Medical and 3xper and businesses like that. And then so that is going to be that's again kind of so basically if we look at it, right? If we say that TI standalone has to get, we target close to 14%, 12 to 14% PBT growth from the standalone business, then we need to think of how else we can get up to 6% growth, right? And that's what's going to be from other investments that we kind of look at from a CapEx perspective. So when we look at the CapEx side, like I said, three chunks. So some money will go towards TI Medical, both in terms of greenfield, TI Medical and 3xper. So I would say again, that's in the range of about like 400 crores. TI, so we will look at whether we need to invest in TI Clean Mobility. That's a decision we'll make later in the year. And then we are looking at some M&A for new lines of business, that are kind of in the same areas that we are, but can kind of potentially provide growth. So I'd say that, up to 200 to 300 crores can get allocated towards that.
Okay, the last part has certainly got us excited. Well, just one other query with regards to this 3xper is that I remember in the initial clause that we had signed, the remaining of 25 crores of investment was supposed to be allocated if certain conditions were met. Further investments from Tube at that point of time. Now, has that been met? And then what were the internal targets that were decided for 3xper right now?
So we'll take a appropriate call based on the time. As of now, that's...
No, but I mean, I think the question.
What is the...
Yeah. Okay. All right. Yeah. Sorry, you were saying?
No, the 25 crores that has been invested into 3xper as per this quarter. I remember in the initial discussion, it was like certain targets had to be met before you make a further investment into 3xper. Have those been met is the question here.
No.
As we discussed, maybe we will take those calls later point
No,
of
he's
time.
asking, have the targets been met?
See, actually, no, we have planned for 300 crores of investments in TI Medical initially. That is
Yes.
what
He's not TI Medical, he's
So
on 3xper.
3xper. In 3xper, 300 crores we are planning to invest, out of which 200 crore has been invested till the last year. And this year, first quarter, we have invested 25, and this quarter we have done 25. Remaining 50 will go this year. That's
No,
what
I think his question's not being answered. Let's just get a better understanding of this, right? And we'll get back to you with the answer to that.
Right,
Okay.
perfect. And I think the same thing with medical. Is a certain deadline that we should be looking in terms of the investment, or I'm just trying to understand.
Medical, see, the basic thing is like sutures is one business, right? So, and we've always said that we look at other lines in medical. So the investments will go into other lines in it. It's not as much more in.
Okay, one last one is that what has really given us this confidence? Because last quarter we weren't really this confident of investing into both these higher investment number. Now, what is really turned around in the last quarter that gives us confidence to pump in more money into both these ventures?
See, basically the way we look at it is that the fundamental thesis of these businesses kind of remains, right? Which is there is good long-term growth in both these businesses, right? Now what we have to look at is, so I think it's better to kind of look at how we kind of ensure that these businesses basically give us the growth and the profitability we need. So if that requires more management attention, that's what we're now doing to ensure that we can get growth from each of these. That's what we will start doing now more.
And then that 300 crores is going to be predominantly capex driven, or is it going to be operational working capital driven?
No, so it depends, right? So like we said with TI Medical, if we're getting into a new line of business, that obviously requires capex, right? So it depends on how we kind of get in, right? If it's kind of a new line of business, if it requires anything that's inorganic, then that requires more capital. Otherwise, it'll be more operational.
Perfect, Bill and team. Thank you. All the best.
Thank you. Thanks so much.
Thank you. Anyone who has a question may click on the raise hand icon. We now move to our next question, which is a follow-up from Vipul Kumar Shah of Sumangal Investments. Please go ahead.
Yeah, just a small clarification. You said 50% market share for electric trucks. So that is Pan India or just South India?
Pan India.
Pan India. Thank you, sir.
Thank you. Ladies and gentlemen, that brings us to the end of the Q&A session. On behalf of IIFL Capital Services Limited, that concludes today's conference. Thank you for joining us. You may now click on the leave icon to exit the meeting. Thank you all for your participation.